Everyone's been asking the same question for the last 48 hours. Why are whales not buying GAIB coin? And if you've been watching the charts, you can feel that something strange is happening. This doesn't look like a normal dip, and it definitely doesn't look like a healthy correction. This feels like a coin screaming for help while the big players sit back and fold their arms. And today, we're going to walk through the story behind that silence. The clues, the red flags, the psychology, and the timing, all of which explain exactly why the whales are choosing to stay far, far away. Let's go back just a bit. Remember November 19th? That was the big moment. GAIB coin got listed on Binance Alpha and even landed a futures listing with up to 40x leverage. That is the kind of event that usually sends a coin flying. Traders expect a pump, communities expect a rally, devs expect hype, and for a very brief moment, the energy was there. The price pushed up to around 18 cents. People were celebrating on social media, calling it the beginning of the real bull run for GAIB. But something happened immediately after, something most retail traders didn't notice. Instead of a massive breakout, the coin slipped. It didn't crash instantly, but it began settling. 16 cents, 15 cents, slowly losing that excitement. And that is when the first clue appeared: the whales never entered. A Binance listing is a buffet for large players. They love the liquidity, they love the attention, they love the volatility. But GAIB's chart didn't show any whale footprints. No strong green candles, no aggressive accumulation zones, no signs of institutional hands absorbing dips. Because while the community saw a Binance listing, the whales saw something else. A textbook sell the news setup. Whales are not buying GAIB because they don't trust its current environment. They don't trust its momentum. They don't trust its stability. And above all, they don't trust its timing. Whales don't chase hype. They don't chase uncertainty. They only enter when a coin is calm, clear, and predictable. And GAIB at this moment is none of those things. It doesn't mean the project is dead. It doesn't mean it will never recover. But right now, the biggest players in the market are watching from a distance, watching the story unfold, watching the team's next steps, watching to see whether this coin can gain clarity, rebuild trust, or stabilize after the chaos. But for now, the truth is simple. Whales are not buying GAIB coin. They're waiting to see if GAIB survives the storm. GAIB is an innovative economic layer that integrates GPU, AI, and blockchain. The protocol tokenizes productive AI assets, such as data centers, GPU clusters, robotic systems, and energy infrastructure, transforming their operational performance into on-chain financial instruments. GAIB tokens are used for paying network and transaction fees, staking by validators, participating in governance and protocol upgrades, and providing collateral or liquidity in DeFi integrations. This creates a sustainable economic ecosystem where AI infrastructure is bridged with DeFi and generates real returns. GAIB has established strategic partnerships with leading institutional investors, Web3 projects, and traditional cloud companies to bring the AI infrastructure economy on-chain. Institutional investors, Hack VC, Faction, Spartan and Alpha, Amber Group, L24, CMCC, IDG Blockchain, and more. Web3 projects, Ether, IO.net, Exabits, Morpho, Pendle Finance, Curve, Cloud and Robotics, GMI Cloud, Siam Cloud, Northstar, PaleBlue.ai, Primec AI, OpenMind, Camp, PrismaX. GAIB is expanding globally with over $2.5 billion worth of GPU assets from more than a dozen data centers across 10+ countries. GAIB aims to tokenize GPU and AI infrastructure and connect it with global investors. Data centers and cloud providers can quickly finance GPU and robotics assets, while investors gain direct exposure to the AI compute economy. GAIB seeks to become the economic layer for all AI infrastructure assets and provide the financial foundation that powers the intelligence economy. GAIB converts investor stablecoins into real-world AI infrastructure. Investors receive AID tokens. When staked, these become said tokens, providing proportional ownership of GPU, data center, or robotics revenue. The protocol tokenizes the assets, manages returns, and distributes them to investors. The process is secured with third-party auditors and insurers. GAIB protocol, 5 layers. Blockchain settlement layer, network immutable record of verified asset states. Asset validation layer, proof verifies AI infrastructure authenticity. Tokenization layer, on-ramp converts real-world assets into on-chain tokens. Financialization layer, reward transforms validated asset performance into programmable on-chain value. Liquidity layer, Liquid integrates tokenized AI assets into DeFi markets. GAIB tokenizes AI assets. Institutional GPUs and robotics are staked into ERC-4626 vaults to produce AID tokens. Staking AID generates SED, which represents ownership in the AI infrastructure portfolio. Validators verify data, participants are rewarded proportionally, and DeFi protocols maintain liquidity. /